Tom Donahue, president of the U.S. Chamber of Commerce, joins us now in an exclusive interview. Tom, welcome. Thanks for joining us. So how do you think about the impact of these new tariffs?
Well, first of all, I'm glad to be here. The impact of the proposed new tariffs would be significant. It would be significant in terms of if Americans kept buying all Chinese goods, it would cost $30 billion for $300 billion worth of every $300 billion worth of tariffs. If Americans bought from others, that number would be down, and the trade with China would be further shrinking. There's also the question of what will China do. They're not traditionally people that sit still, and they have a lot of options to add pain to us. And finally, what is the political implication in the short term and in the long term? The long term being the presidential race, and that would be affected by a move into a recession. In the short term, it affects the markets, it affects the basic mentality of how people are feeling about their company and their country. This is something that we hope people find a solution to before we get to the September deadline.
Tom, would you say that the first batch of tariffs ended up having less effect than perhaps originally feared? And is there a chance that this next batch could play out in a similar way?
Well, I think it is clear that in recent weeks there's been more and more noise that I'm hearing from our members about the tariffs are beginning to pay a price. Now, you know, there are people over at the White House that every week have to remind everybody that China's paying for the tariffs or Mexico was paying for the tariffs. That's a good idea, but it's not true. And we have to understand that we take that money out of our economy. If you buy $1 million worth of steel that has a tariff on it, you pay the government of the United States $250,000. And this has an effect. I believe the feeling and the noise, even amongst the bigger companies, is getting more pronounced, and little companies who have the same tariff requirement, it's more pronounced. And don't forget, then what do the companies do? They jack the prices, so it's going on the consumer as well, all of which affects the economy.
So, Tom, you and I have talked a number of times over the last few months, and I know you're sort of on board with the idea that the administration should go after China for intellectual property theft and forced technology transfer and level the playing field for American business over there. So if not tariffs, what then should the president do to increase pressure, bring the Chinese to the table, and have them make a fair deal?
Well, first, let me say you're exactly right. I support the administration's efforts to level the playing field with China, who, as we know, are pretty good at taking people's intellectual property and demanding that they put up their technology in joint ventures and keeping us out of many of the business activities in China. And we were not very vocal when the president used some early tariffs to get the Chinese attention, and I believe that that's a very special case, and that's fine. What I'm concerned about now is that if you're really talking about going to all of the Chinese exports to the United States, which $300 billion would be the incremental amount, if you're also talking about, as I've heard from people in the White House, that if this doesn't work, we'd make the tariff much higher. I think, just to remember, it's going to have a pronounced effect on the psychology around the American economy and on the economy, and it is going to spur the Chinese to a more vigorous set of actions. If not tariffs, what? Serious negotiation, using the relationships that are being established and the costs that are being placed on both economies. I want to tell you, we can get a deal with China for one fundamental reason. We both countries have serious things that we need from the other, which is absolutely the best basis for any agreement.